Now, what are liabilities? Now, liabilities refers to interest that people outside the enterprise have on the enterprise assets. So liability refers to interest that people outside the enterprise have on the assets of the enterprise. For example, an amount owed to someone for goods bought on credit, right? That is a liability. Now, liabilities are also divided into two, and that is current liability and non-current liabilities. But what are the difference? What is the difference between current liabilities and non-current liabilities? Now, let's begin or start with current liabilities. Now, current liabilities refers to debts that will be paid off within 1 year. Those are current liabilities. And non-current liabilities refers to debts that will be paid off over more than 1 year. Now, the following current liabilities are found. Examples of those are: number one, creditors. Now, a creditor, what is a creditor? A creditor is a person or enterprise that sell goods or services on credit to our enterprise. Therefore, our enterprise owes them money. In other words, a creditor is a person to whom our business owes money, right? That is a creditor. Number two, bank overdraft. Now, a bank overdraft is when the business spends more money from its business bank account than it really has. For example, maybe a business has got 5,000, but it spends 15,000. So this means the business owes the bank money. We call it overdraft. So overdraft is when the business spends more than what it has in its bank account, right? So another example is short-term loan. Now, a short-term loan is a current liability. Now, a short-term loan refers to a portion of a long-term loan that will be repaid within 12 months. That is short-term loan. Short-term loan, it's a current liability. You need to understand that when we talk about short-term loan, we're talking about the current liability, because that loan will be